say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town.
Welcome in to Just the Tips podcast by the Stock Jocks. You've got your host, George, the hostess with the mostest. You've got El Gordo and Bruce here in the house. How are you guys?
Muy bien, mijo. This is the Spanish edition of Stock Jocks. The narco edition.
This is the narco edition?
Ice is going to knock on the door right in the middle of our pod. Emigre.
Well, it does look like you're smoking something over there, Bruce. It looks like you're just sitting in the haze.
No, man. I'm just smoking a stogie in this all-time high market.
Ooh, there you go.
What else is there to do?
On cloud nine.
Before you started, you were saying what did you say about Trump at the master class?
Trump just gave a master class on how to defuse the Middle East. Oh, you guys saw it? What was it? What do you call it? The 7-day war or something? The 6 day or something amazing. He had a great name for it. I think he's with his naming, like his nomenclature. I think he's really coming into his prime.
He's a marketer, that's for sure. That's what he knows how to do, market himself.
He's just authentic, dude. Look, I don't think we could have asked for anything better out of that 7-day war. I mean, maybe it would have been nice to actually have destroyed the nuclear sites, I guess. But outside of that,
we obliterated them. What do you mean?
The best part about it was, and I think he's right. He's like, these guys have been fighting for so long, they don't know what the fuck they're doing. Dude, I don't know if you guys heard him say that. But.
So insightful. Well, I thought Kushner fixed it in the first administration, right? Like he brokered Middle East peace. Told Iran to go ahead and pound sand on the treaty. Let them develop for 4 years. Good idea.
Yeah, so you can bomb them later.
I don't know, dude. I thought it was pretty effective, and they both countries listened to him. Like the war's over, the market's at an all-time high. Like this big beautiful bill, which is maybe none of those things, is about to get through. Like
getting bigger.
I don't know. Yeah, I mean, I don't necessarily agree with everything in the bill, but I mean, there isn't a ton to complain about.
Well, it's great for crypto, right? I mean, printing just massive amounts of money and huge deficits, and the dollar is just going to be, not going to be a reserve currency anymore.
I think it's good for gold. It's good for crypto. It's good for, anything that's an inflation hedge, like tips or what. I mean, anything. It's
a great opportunity to profit off of misery, basically. That's what you're saying.
Yeah, but but there's an opportunity for everybody to do that, I think.
Except for people without capital and poor people and everybody except for the rich, 1%. Basically, I guess the crypto bros are going to do well.
Well, right? Everyone has access, hopefully, to the market in some capacity.
I don't know about that. Said to the minimum wage person who can't buy more than a dozen eggs a month.
But not only that, but it also I think will help large scale companies, right? Like if they're able to raise capital, their stock prices are up. They'll be able to fund more expansion. They'll be able to hire more employees. It isn't completely insulated to just the wealthy. I mean, there's obviously disparity, but it's going to benefit everybody.
All the low-wage workers are getting deported.
No, that's a completely separate issue. There's low-wage American work for sure.
AI is taking the job of high-wage American workers. I've been reading blind. It's everywhere.
So basically, like Trump, Bruce here, he just looks at the stock market and says everything is okay.
Single issue voter.
I'm going to feed that to the starving kids in the real America. Look at the stock market. It's fine. Shut up.
The stock market, I think, is a good indicator of where we are.
So you think it's going to keep going up? This is over. The war's over. There's no nukes. Nothing bad's going to happen.
It's hard to tell. It's honestly hard to tell where the market's. I do think we do have sort of a systemic problem here by printing this much money and getting to this big of a deficit and not really being able to bail ourselves out. I think that will eventually come back to bite us in the ass, but I don't know. For the intermediate term, it doesn't feel like there's huge systemic risks that I'm seeing. If anything, I think Trump will force them to cut interest rates, which looks like they would do anyway. Inflation's come down in the last couple weeks, and I don't know. I think
that is good. You're basically Orwellian. You know,
I think there's some near-term catalyst for the market going up. I don't think that could maybe happen indefinitely, but I don't know.
the economy and create inflation to make rates go down to make the stock market go up. Okay, got it. Master plan, 40 chess.
Well, they're printing more money, but the inflation's still coming down, so something's working.
I mean, the economy's slowing, I think, is what's happening. There's going to be massive stimulus.
I don't know.
There's a lot of things where I think people have, played around with holding off jacking their prices for the tariffs, right? So like
They're eating the costs. Like a bunch of people
for the
have talked
time
about
being,
it.
because they're not sure they're going to stick. So once you raise prices, it's hard to roll back.
Is it though? Really? I don't know. I haven't seen any good news economically in a while, other than inflation going down. But that's really an indicator the market economy is slowing. I've been saying that for fucking a year. And the economy just felt shitty and just kind of chugging along. Yet people are getting laid off. Tech layoffs are still coming back.
Tale of two economies. If you're in the 1%, it's great. If you're not, it's not so good.
And you're not a tech middle worker, right? You're not basically you're not a knowledge worker in tech.
If you're an AI researcher, you're getting $100 million payday. So,
oh my god, I picked the wrong major. God, I'm gonna go back to school.
Facebook, they recruited 8 people from OpenAI. At least one of them said they weren't getting 100 million. So, who knows?
But I think
I'm sure they're getting enough.
I think they're getting 8-figure paydays and 8-figure signing bonuses, which is just insane.
Yeah,
that should be reserved for like Ronaldo and LeBron. Like, not some dweeb programmer.
Yeah, your elite programmers get your elite salaries, just like the elite.
The funny thing about those programmers is like their job is to like program something to get rid of their job.
Yes,
they'll pay them any amount of money to do that.
What's what they say, right? Like the best thing you can do is eliminate your job, right, to make yourself more valuable. I don't know. That doesn't make any sense to me, but
I still got to think that profit margins go up here at some point from AI, and you're going to start to see it come through, right? Like jobs just aren't, when they get rid of them, there aren't mass layoffs, but people aren't being replaced necessarily. So I think the average company is going to do better. Like I heard someone float the theory that it's not always the AI companies selling the tools; it's the other companies that are going to benefit from them. So your average company rolls out AI, can eliminate a bunch of positions. They're going to save a lot of money, so you'll see profit margins go up. So if that's it,
1% gets richer, and all the employees get fired. So here we go. Pitchforks are coming. UBI and pitchforks, or UBI or pitchforks. President Alexandria Cortez.
Oh my God. We shouldn't even talk about the New York City mayor election. That thing is so depressing. I mean, what are we doing? I just have one question for everybody who voted for him. Have you ever been to San Francisco? like, have you ever been there a single time in your life? Like,
I'm going long New Jersey, man. Everybody's going to go across, across the border.
No, they're going to go. They're probably going to go honestly to Connecticut because the taxes are much better there.
Yeah, Connecticut. Yeah, sure. Go along Connecticut.
So go
along Yoga House,
Palm Beach, Miami, Crypto Rico.
Yeah, that's brilliant.
All right. Well, we're trying to move fast today.
All right. Yeah. Do you, George? Did you ever give a little background or disclaimer, or do any of the normal host things that you're supposed to do at the beginning of the show?
No, you guys just cut me off. You don't even let me say what the pod is.
Better late than never.
Better late than never. So first and foremost, this is Just the Tips podcast, where every so often, whenever we choose to get on, call it every 3 weeks or so, we get on, we talk about the markets, which we already did, and then we debate a stock, the bull and the bear side, so you get to hear both sides of it. Today, I think we have Bruce, you're going to be the bull, and El Gordo, you will be the bear. In addition to that, I will give our disclaimer up front. So this is not investment advice. These are only our opinions, and just that. Please consult a professional before making any decisions. And with that, I would encourage you also, if reach out to us if you want us to cover a stock. You can reach us at stockjockstips@gmail.com or follow us on the socials. All right, with that, should we kick it off? Bruce, what are you covering today?
We are covering a very, I don't don't even know how
Mega
to
cap
put
name?
it. What? What did you
A
say?
mega cap?
It used to be a micro, but now it's closer to mega than maybe it had been in the past. This is a relatively uncovered company. It's sort of a gem. I'm not sure how to describe it.
Hidden
but
gem.
A hidden gem. That's right. It's a company called Nebius, and I'll talk a little bit maybe about the background of the company first, as well as some of the pieces, some of the parts of the company, and then maybe talk about the bull case here. I will note this is a company that I own in my own portfolio, and I think George may own it too because he took my advice and made the best 1 year or 3-month gain of his entire lifetime investing. It's literally the only stock he's ever followed my advice on, even though I told him to invest in Bitcoin in 2013. Nonetheless, all that
That's
being
what told me to
considered,
invest in some weird Chinese stocks, which I have no idea where they are now. But yes, I do own this as well, for
yeah,
disclosure.
they're called like Alibaba and
Tencent. Yeah.
Never heard of them.
yeah, some weird Chinese. Anyway, okay, so Nebius is really kind of the rebirth of a company called Yandex, which was a
Related
public
to
company.
spandex?
No relation to spandex, but was a public company for several years. I think it actually went public in 2011 and then was sort of removed from the NASDAQ in 2021. The reason being it's a Russian company. Effectively, this was like the Google of Russia. It did everything from search to maps to cloud services. It was really like in a lot of ways a Google clone, but built natively. And it did about 60% of the search volume in Russia. So it became a really massive company actually over time. And it was the CEO and co-founder was a guy named Arkady Volos. I think I might be mispronouncing that massively, but nonetheless, he co-founded the company in I think late 1999. He built it, took it public, and then at the time Russia invaded Ukraine, the company was had a market cap of $31 billion. So he really built this massive company, maybe partially on the back of like Google's success, but really built it specific for the Russian market. And it was one of their largest companies. In fact, it was the largest IPO in 2011 since Google's IPO in 2004. So like a very successful company that compounded over time and was sort of, delisted or removed from the NASDAQ for, exogenous reasons in a lot of ways. So what ended up happening is Ukraine invaded Russia, and so they had to delist, I think, all of the
Wait,
Russian.
Ukraine invaded Russia?
Sorry, Russia invaded Ukraine.
You're really going MAGA on us here.
Yeah. Russia invaded Ukraine, and they had to delist all the Russian securities. Also, the stock went sort of like down to like almost zero, effectively, given where it was trading. And the NASDAQ usually delists stocks like this, but they gave them sort of like a special reprieve so that they could figure out a way to divest all of the Russian assets, keep all the non-Russian assets, and potentially relist. So they spent like, I want to say a year and a half going through this process, and they divested really the majority of their core business, right? Like their search business, their maps business, their cloud business, all of that went to Russia. In exchange, I think they got around $2 billion in cash. So like a fraction of what it was worth effectively. Plus they got some remaining assets that were left. And I'll talk about those assets in a second. Maybe I have a slide actually to show you what was left. Let me see if I can share screen.
I'm really disappointed this has nothing to do with spandex.
Wow. Spandex is maybe another name we should cover, but I think it's private.
Are they a public company?
I called this Arcady's game, and I'll tell you why at the end. But it's obviously the CEO, but I'll tell you a little bit more about the company, and maybe like to talk about the sum of the parts really quickly, and then to save the best for last, which is their core business around a GPU cloud. So really, there's 5 different businesses that make up Nebius. One is this Talaka business, which is sort of similar to a Scale AI type business. And so over the last, couple months, Scale AI was just acquired by Facebook for half of the company I think was acquired for like nearly $15 billion. So the total company is worth about $30 billion. And they've obviously scaled really meaningfully. This is a business that does, roughly the same thing. And so a lot of the cloud companies are now looking for other players to help them. And what they do is basically data labeling. So really helping fine tune large language models at scale. And so you can look for like falconry experts or Russian history experts, and they can help like the large language models define things that they don't know. And that just becomes part of their corpus. So that's their first kind of secondary business. Their second is like basically a B2C ed tech platform for software engineering. The business in and of itself is doing relatively well. It's 5x over the last 2 years. So like it's a good kind of independent business, but it probably isn't core to Nebius's actual business of running a GPU cloud. And my guess is that they'll probably spin it out at some point. The third business is like an autonomous driving technology for self-driving cars and delivery robots. So they have some interesting strategic partnerships. They partner with Uber and Uber Eats. They're building like some of those little robots that, can go around city sidewalks, and they can deliver food and medicine and things like that.
The ones that'll eventually put Uber out of business.
So it's not. I think they do some around the AV piece, but I think a big part of it today is like the little robots, like the sidewalk. Robots.
Deliver your pizza.
Yeah, so that's their third business, and then the fourth business is a business called ClickHouse, which is an open source column-oriented database management system. And this is a business that they built at Yandex, and this is an at-scale business that's raised from some of the like premier venture capital firms in the Valley. In fact, it just raised in the last month at a $6 billion valuation, and Nebius owns like 28%, but I think they own around 25% today. So their stake in that business today is like $1.6 billion, and this is like this is one of the premier, I think, database private companies in the market today. It's used by a lot of companies that are trying to build scaled solutions for their infrastructure. And so this is a business, I think, that, maybe not specifically core to how they're building Nebius, but you can probably, get liquidity in this name, and you have a pretty recent data point on, what the value of their shares should be.
And so that was the Series C, right? I think you have listed here the Series B at $2 billion, but you had real.
Oh yeah. I put it in the bottom. Yeah.
Venture investors. I mean, this isn't some random venture investor out of like Russia. It's Index, it's Benchmark. You've got Cotu, you've got Altimeter. So like you have the cream of the crop here investing in this thing. So like I would call that a real legitimate company.
Yeah, absolutely. And so that's kind of those are their non-core businesses. The core business that Nebius has built is really around GPU clouds, and probably the most recognizable name in GPU clouds is CoreWeave. And they've effectively built like a CoreWeave competitor. They're allowing for companies of all sizes to turn on GPU clouds and, pay as they go. Similar to, how the hyperscalers have built their own cloud, but these are more specific to GPUs. And so part of the reason that you need specific clouds is, one, you need access to GPUs, two, you need access to power, and three, you generally need access to data. And I think that Nebius has been able to build a lot of these things in a unique way. One thing to note is that the company, as soon as they went public again or got relisted and changed their name and divested their assets, is they raised a massive round from Excel, Orbis, and NVIDIA themselves. So NVIDIA has only invested really in maybe 2.5 GPU clouds, CoreWeave being one of them, and Nebius being the other one. They also, I think they invested in Lambda too, although I'm not totally sure what the construct of that deal was. But this was a major investment for them. And the one thing to note about Nebius is that their data center, their GPU cloud, or their main GPU cloud that they own, is based in Finland. And so for all the data sovereignty reasons that you need for European clouds, this makes it a really natural fit. The other piece is, to my earlier point around access to GPUs, obviously with NVIDIA being an investor here, they have direct access to the GPUs, to the latest kind of Blackwell chips that NVIDIA is producing. They obviously have a vested interest in the success of the company. And so it's one of those companies, I think, where there's a lot of attributes of this company that are similar to a CoreWeave, but some are different. Principally in the fact that they're based in Europe, although they have started to open data centers around the world, including in the United States. But two, they have access in ways that other people don't have. So you think about the GPU cloud market today, and there's several GPU clouds, small ones, big ones, medium ones focused on different parts of the industry, but very few have the validation, from the godfather of AI himself. And so I think that gives them a massive differentiation from other clouds. Talking about the three reasons that I like the company, really the third reason is the reason I like the company the most. But the first is, this is a fast company, fast market. So they're growing, very, very quickly. It's one of the fastest growing companies that I think I've ever seen in a private or a public context. So, and this is a public company. So when they give guidance, it's not like, when a private company gives guidance, they're actually, signing up for these numbers in some ways. And so from 23 to 24 to 25, their ARR should go from 21 million to 180 million to 875 million. So these are just massive gains that we never see in the market for any company. And so I comp them against like Meta and Google in their best years ever. And they were, effectively half of what Nebius is predicting that they'll do this year alone, let alone next year. And so maybe to put that in perspective with one other data point, like if their Finland data center goes to full capacity, that data center alone should be able to do $1 billion in ARR. So it's one of those things, I think, where they have the footprint to build into this. They obviously have to spend in order to support it, similar to what CoreWeave does or any of the GPU clouds. But the market's there, and they're projecting for the street, right, that they'll do. They originally projected that they would do between $500 and $1 billion in revenue this year, or ARR this year, and they narrowed that forecast upward to $750 to $1 billion in ARR. So a company that's seeing massive growth on the top line, I think that's probably the best way to value the company in the near term. The second reason is they have better tech, so they should have better multiple of Papa John's, which is just a classic slogan we should use for everything. But Nebius designs their servers in-house, and so part of the deal was when they split from Yandex, Arcadia was able to pull like 800 developers from Yandex. So he has the leading developers that built this $30 billion company effectively working on their GPU cloud. And so they designed their servers in-house, which gives them power efficiency and TCO that are almost unrivaled except by Google and Microsoft.
TCO being total cost of ownership, right? So lower total cost for end users.
Right, exactly. And so even like Oracle and Alibaba and IBM, and the global average is much, much higher. Because they've been able to build this solution in kind of a vertically integrated manner, and that allows them to give cost or pass on cost to their customers that are just going to be lower than their competition.
Wait. What percent of the BOM is the GPU? It's like literally 90% of the BOM of a server. So let's be clear. You're maybe optimizing, maybe they're half, at best a few percent.
No, they're optimizing 20 to 25%. If you look at the right side of the equation, the cost of the GPU per operation.
Yeah, this is sources Nebius, right? Yeah, I'm sure. Yeah, and so this Russian company came out of nowhere and is better at making GPU servers than Supermicro. Got it. Just continue.
Well, they're better at making GPU servers. Yes. Nonetheless, I think I think power usage effectiveness, this is something that you can actually measure, right? And if your power efficiency is better, then your cost is going to be lower.
Well, that's the one metric that Supermicro has been humping since inception, and they've been working on for 20 years. So anyway, we'll get to why this is bullshit later. Don't worry.
All right. The last piece is the founder. So we talked a little bit about him earlier, but Arcadia is a compounder. Like the reason that I think this is an interesting company is because you have somebody who's leading it and building it. That's built a $30 billion company before. He knows this market. He knows where the assets are. He knows who the developers are. He has a team and a track record. And like I think we often maybe like undervalue the leadership in a lot of companies. And I think it's like if you can track one specific metric to success, I honestly think it's leadership more than anything else. Like good leaders find a way to win, and like this is a guy who has won for 25, 26 years at this point, and even in the last 6 months since they came out effectively, the stock has doubled, right? Like it went from call it 20 to nearly 55. I mean, I think it closed at an all-time high today. Company's worth, nearly $13 billion, I think, in an equity basis. And so this is a guy who understands how to build companies, how to scale companies, and he's compounded his whole life.
So is he Russian, or what is he? What's his nationality?
He's Jewish. He was born in Kazakhstan. He lived in Russia, but moved to Tel Aviv in 2014.
Wow, so he's Borat. He's basically Russian Jewish Borat. Got it.
Yeah. So he as soon as Russia invaded Ukraine the first time is when he actually moved, and like this is a guy that like Putin knows himself. I'm guessing he has like security and stuff. It's because Putin was asked about his stance on the war, because he was originally put on the sanctions list, and he's obviously anti-war, anti-invasion, anti-everything, and Putin was like, Arkady is a very good technologist and he's entitled to his own opinion. So it's one of those things, I think, where this guy has a massive profile. I think he's been able to build something very significant in a previous life, and he's running that playbook back in a market that's bigger and faster than anything we've seen before.
He looks like he's killed some people. That's what he looks like.
You say that like a bad man.
Yeah. He knows where the bodies are literally buried, right? I mean, talk about Russia, Kazakhstan, and Israel. Okay, I want to bet. I'm sure they just totally legit.
Well, people who disagree with Putin tend to fall out of windows. I don't know why that correlation exists, but I'd be a little nervous there.
Scared money don't make money.
All right, so is that the bull case? That's a pretty good
That's
tight.
okay.
All right, well then I guess I'll take the mic. Sharing is caring. All right, Nubius.
I love the formatting though.
Yeah, isn't it great? I love this thing. Smaller, cheaper Dutcher. I guess you're more European, but like they're based in Amsterdam, so let's just start there. They're high as hell every day, so that's the first issue. All right, so let's just talk about. He just throws bullshit out there about how they design their own servers. Like literally, this is a business we talked about. The server industry we've talked about. There's basically no differentiation. I really struggle to see how any company can claim that they have a competitive advantage because they can design servers better than everybody else. It's horseshit. Let's see, benchmark back performance and cost efficiency. This is a slide from Nebius Group on what their differentiation is. This is them putting their best foot forward. First thing, sole focus on AI infrastructure. Nobody else is doing that. Bullshit. That's the first thing. Second thing, long-standing collaboration with NVIDIA. Who has that? Nobody? CoreWeave, Supermicro. Pretty much NVIDIA is in bed with fucking everybody, so also bullshit. Full control over the whole AI infrastructure value creation chain with in-house server design, proprietary cloud platform. You know what? I could create a proprietary cloud platform. It would not be differentiated, but ensuring maximum productivity and quick scaling. I mean, I've never seen so much bullshit in my life. So bullshit. Long-term relationships and collaboration experience with leading server ODMs. Yeah, Supermicro, I'm sure it's a really, really differentiated relationship with the guys that make servers. So again, here, expertise in running data centers with power loads. Nobody's done that before. So, they have a strong team with 400 software and cloud engineers. Their team is sized to support future growth. Like, there's nothing on this slide that is not complete bullshit. I suggest to you guys. So what is, this is from the report from this is really awesome sell-side firm called D.A. Davidson, kind of a white shoe firm. You guys may have heard of it. Not a lot of coverage, so, hidden gem, as we discussed. But, this is what they said about it. Basically, they're saying here, I'll just read it. We believe that it's become more clear that cloud computing was never designed for AI. The fundamental architecture of the hyperscalers, AWS, Azure, and Google Cloud, was built around general-purpose enterprise workloads. And blah, blah, blah. But AI workloads do not behave like traditional enterprise applications. AI requires highly specialized compute infrastructure, low latency networking, storage optimized for model checkpointing, blah, blah, blah. And they also talk about in this note about how these guys are basically price gouging. That Microsoft, Amazon, etc., is that they're just able to, because there's a scarcity, they create artificial scarcity by locking people in because there's not enough GPUs, and so these guys are going to come in and just price disrupt. But I think it's really interesting. Like, you just look at the scale, and even if you were to be generous and give them credit for $1 billion in revenue this year, I mean, you look like AWS, their cloud service revenue, $30 billion in Q4 alone. Azure, these are Q4 numbers in 2024, $20 billion. So you're telling me these guys at a tiny, scale, a microphallus scale, are somehow going to be cost disruptors against the cloud players and win? I think, they're also, by the way, they're European, basically. So they'll give you some credit for really having Russian roots. Those guys are, they know how to live in austere environments and live off of nothing. But at the end of the day, this is, the hardware market in particular, it's 15% gross margin. These guys it's a really scrappy market to begin with. So the idea these guys are going to come in and just be a low-end disruptor because, hey, we designed our own server with parts that we didn't design, like GPUs are 90% of the BOM of a server, like, it just does not pass the smell test. This is like it's like a white trash core weave. It's a Euro trash core weave, basically. So then you look at the valuation. I got my, for those not watching the presentation, this is Nubia. So Wook and Panub and all the Wong places. That's, Eddie Murphy. I'm old, so it's from Saturday Night Live, Buckwheat. Like you look at the next, these guys are trading in next 12 months, EV to sales, like almost 15 times. Corey was trading around 20, but everybody else with really fat margins, admittedly much lower growth. Amazon, they have retail, so it doesn't even really count. But like Microsoft's at 12, and Alphabet's at 5, and Oracle's at, I can't even read that, 10. DigitalOcean, highly specialized compute player, 4 fucking times. So I think this is the buckwheat of the cloud services space. I'm a seller, no differentiation. I wouldn't say go out and short it today because look at CoreWeave. It's amazing how long the market can be stupid. If you're a fucking Mo, you'll probably make money on this thing in the short term. But on a fundamental basis, you need to have a moat. And all I heard there was blah blah blah. Magic beans. So it's a really short, bear pitch. But I would just argue that I didn't hear anything really differentiate about these guys other than they have access to NVIDIA GPUs, which is what everybody else has. So, and they're European. Great. But this is going to end badly. I've seen this movie before.
Where have you seen this movie before?
Just pretty much the entire comic equipment industry. Anytime anybody comes out and just says...
No comic equipment company went from 50 to 180 to $1 billion in revenue.
Yeah,
that never happened.
Yeah, this
isn't a forecast that they're just like, putting into thin air for no one to follow. This is like a public filing. Like even if everything you say is true, the growth is still like something we've never seen before in any company.
But giving yourself credit for that, like it's sustainable, is insane. Like putting a 15 multiple on that is fucking insane. So
even if you're thinking about the next 12 months, like they believe like halfway through the year, we're 6 months through the year, that they're going to like 6x revenue from $150 million.
Yeah, I just feel like...
how can you discount that?
When the music stops on this thing, this multiple is going to come crashing down. Their margins are going to come crashing down. It seems like their
but the music could stop in like 5 years or 6 years. Like, we have no idea.
That's just not a thesis, man. Like that's a Warren Buffett would be rolling in his grave, which is why crypto's doing great. What do I fucking know? Bitcoin, it's a bunch of computers doing work and people are
Warren
paying.
Warren Buffett also like did not purchase a single technology stock for the last 30 years. Like,
Yeah,
I mean,
yeah, he bought IBM.
and we only cover technology stocks
like-
here. Like,
So basically, fundamentals don't matter, is what I'm hearing, Bruce. Is that this thing it's the greater fool investing theory. And
fundamentals do matter. They're not like this is real revenue that they're going to be accruing.
What's their cash flow going to be this year? Massively fucking negative. These guys, I just did some really good internet research on like what DCF valuations are on this thing. They're negative.
What was Amazon's cash flow early on when they went public? What was Facebook's? What was
And
Google's cash
Amazon
flow
had
when they
scale
went
from
public?
day one. All these companies that are winning in the cloud had scale from day one because
No,
it's
they
basically.
didn't. They built their GPU. They built their clouds over 12 and 15 years.
But
They
Amazon
didn't
already
build
had
it.
infrastructure for the retail business when they went, and Google already had infrastructure
But
from
that
the cloud.
It took years and years for them to scale. Even at their peak, they weren't going from 100 million to 900 million in 1 year. Like,
No,
that wasn't
but
happening.
just saying that I don't think that really just reflects the fact they have access to NVIDIA GPUs this year. They're getting an allocation because NVIDIA wants to spread the love. These guys are going to get
Reflects the
dropped.
market and their ability to execute in a very competitive market.
At the end of the day, I think you're getting full credit for that in this valuation and more. And like this thing is being priced like it's going to, continue on this trajectory, and it's just not. Like 15 times forward revenue, and when they went on this massive growth tear is just wild. So, we'll see. I mean, I don't disagree that if they can keep getting NVIDIA GPUs for a while, and people keep wanting a European alternative for a while, that could be okay. But the market's going to be up, not going to be up and the right forever. There's going to be more players that just like them that can come in that'll be designing their own purpose-built GPU servers. Like there's just nothing there. So yeah, I mean, like this is like just like Bitcoin, it can go up for a long time before it goes down. But like, I mean, I feel like there's a more sustainable reason for Bitcoin to exist. It have an alternative to currency. Like this is just like, basically you're telling me this is Supermicro selling cloud services. By a really
Bitcoin
crafty founder.
It's a terrible example. It's been around for like 20 years, and it's at $107,000 a coin. Like, I think
Well, look at
anybody would be
Supermicro
happy with
now.
that return in any time period.
I mean, look at Supermicro. Look how they've done the last year. I mean, like they're still a big company, but they've got more than cut in half. So
But
that's
this
the
is not
moment that they're going to have.
Supermicro. I mean, this is closer to an AWS, right, which has been highly profitable.
Yeah,
versus
Supermicro is a
just
pure play hardware
provider.
company out of China.
You're saying that the differentiation here is going to be. First of all, they're not out of China at all. They're Taiwanese. Very
Yeah,
different.
exactly.
And they're based in San
There's
Jose.
only three
They're actually-
companies in the world that recognize Taiwan as not part of China. There's
But
three
they're incorporated in San Jose. To be clear, half the workforce is in San Jose. So I heard from a little birdie. So they're not a Taiwanese company. Actually, I misspoke. It's led by a Taiwanese national, which is different. But at the end of the day, like you're telling me, all the differentiation is coming from building this hardware in a differentiated way. That's what Supermicro does. Like all the value in this company, you're saying, is coming from their ability to build hardware and deliver a lower TCO. Telling me that they can do that better than Supermicro, who's the biggest provider to NVIDIA today, like I just don't buy it. I don't care how crafty this Russian, Israeli, Borat is. It's bullshit. And he's probably got pictures, recordings of Jensen Huang with a Russian hooker, getting pissed on or something. Because that's, at the end of the day, I just don't see anything at all sustainable here. So, buy at your own risk. But this is not investing. This is speculating. This is betting on magic beans. You heard it here first.
For the record, we do not. We're not going to strike rumors about Jensen Huang and his Russian exploits.
Our lawyers will. I'll run this by the lawyers before we publish. He did
One
bust
thing
tables
I
at
will-
Denny's.
One thing I will say to help your cause, El Gordo, is CoreWeave actually trades below Nebius. So I think all of these, you grab the right number except for CoreWeave. It actually trades at 13, closer to 13.5 times.
But
EV.
it was
CoreWeave is
an
growing.
anything-
CoreWeave is
grab
much
the
more at
EVD,
scale. CoreWeave is much more at scale, and it's growing much slower.
Yeah.
I mean,
But they're
like,
American. They're not running by some shady dude that Putin's friend. This is Putin's cloud, is what this is, basically. So
I think. See, that's the noise in the market where I think there's like actually real like alpha. I think like there's noise around like the background, like where he's from, like all this stuff, and that's what creates the opportunity. To be honest,
at 14.5 times sales with no profit.
the core business is like growing faster than anything you'll ever find in any market. and it's growing in the fastest market of all time. And it's building a product that has a lower TCO. They also have a massive balance sheet that they've been able to build over, the last couple of years, both in equity and in debt. And like you have a guy who can operate, like who has a multi-decade track record of operating, of building solutions, both on the software and on the hardware side. And so like there's only a couple ways to truly play, I think, the AI market, like in a pure play way. And like CoreWeave is obviously one of them. In the public markets today, there's a couple others, but most of them have mixed models, right? Like Meta or Amazon or Microsoft. But there are very few ways to play the AI market in kind of a pure play way, and this is one of the few. And it has all of the hallmarks of a company that can scale.
Yeah. I think that's all I have to say on the subject.
It's one where you almost have to ignore the valuation, just say how big can this company be, right? I mean, the TAM is potentially massive.
I don't know if you have to necessarily ignore the valuation, because if you roll the clock forward and say, hey, what does 2026 look like? Let's assume they hit their numbers this year because they've reaffirmed them in their latest guidance. And you say maybe they don't do even as well this year as they did, or next year as they did this year. They get to 1.5 billion, right, in ARR. That's a company that's adding 50%, right? Or 50% top line growth, which is massively slower than what they did this year. So it's a conservative estimate. And like, these companies trade on revenue multiples. So $15 billion isn't out of the question. So I don't know. I don't know if it's necessarily like overvalued by the way the market values growth today.
Like, what's sustainable EBITDA margins on this company? And like, or in gross margins.
By the time they have to like produce sustainable EBITDA margins, it will be 2030. Like the battle will have already been fought and won. Like this isn't like a private equity takeover. Like we don't need to like recap the company on like a big debt line. Like people are going to buy this based on their revenue profile alone. That's just the reality of the market for these types of companies. Same thing with CoreWeave. I just think that's the reality. Like we can pretend like EBITDA is important here, but it's not.
Not for a while. It's again the greater shut up and ignore fundamentals is what I'm hearing. Growth at all costs, and like you'll be able to get out before it ends, and before the multiple just totally gets cut in half, or actually it's probably going to be cut into a fifth of what it is in the next few years, I'm sure. But you talk about 50% growth, like that's it's not that big of a number, So we'll see. But what's the market cap now?
They're 12 billion as of at least Friday. They went up 5% today. They were $12 billion market cap, 11 billion EV.
Pretty. So what are you playing for? Like, what is this going to be? 100 billion, Bruce? And that's what you're playing for when you buy something speculative, right?
I mean, look at what CoreWeave is. CoreWeave's what, $80 billion company, right?
Yeah, almost.
Yeah. So I think there's going to be at least a couple clouds that are worth tens of billions of dollars. If you think like AI is going to continue to expand at the rate it's expanding, and the demand for this technology, the demand for GPUs, the demand for access to data centers continues to expand, which I do believe, like big picture, there's going to be a couple companies worth north of 20, 30, 40 billion dollars. We already have one that's north of 80.
So you're playing for a double or a triple. I could buy that. I just feel like you just got to get out. I mean, I could see it just running there in the next 6 months, and then like it just totally collapses when people take their profits and there's just no reason to own it anymore. But I have trouble believing this company's going to be a $30 billion company in 5 years. I just don't see why they just wouldn't get their lunch eaten by somebody else. But, we'll see.
How much dilution do you think they have to suffer? I mean, I guess it depends what they can sell those other parts for, right? But, I mean, they're going to have to raise capital. That's the big thing about all these CoreWeave or these NeoClouds, right? You got to buy more NVIDIA GPUs. So you get massively diluted here.
Do you get massive? I think they'll be able to raise capital by selling some of their stakes in companies. I think they'll be able to eventually get to a cash flow profile that allows them to accrete capital to the balance sheet. Like I think they'll be able to raise debt like they just did. I think they'll, hopefully be able to create unit economics that work long term for those GPUs so that they can like depreciate them in a way that makes sense, like on a standalone basis. But it's early. I mean, look, I think they have a really strong balance sheet today. I think they're, actively trying to manage that, and I think they think about it like with a more sophisticated lens than like a lot of the neo GPU private clouds that I've seen enter the market today. And like honestly, I think Nvidia is like Nvidia wants them to succeed. Like their success helps Nvidia, right? Because then people are not using Amazon or people are not using Google, and they're still using their chips. And so I think Nvidia is incentivized to have CoreWeave be successful, to have Nebius be successful, to have Lambda, like some of these larger scale GPU clouds. I think Nvidia will want them to be successful. That's why they took a large equity position in them.
Won't Nvidia want to have 10 of those so they can play them all against each other? I mean, that's the thing, is these keep popping up, and there's going to be more.
Nvidia is approached by 100 of them, but they obviously aren't going to invest in every one. I think they invest in the ones they believe in, and they have like access to perfect information. And look at how well they've done with CoreWeave. Like, look at Nvidia's position in CoreWeave. It's like 30x because they don't have enough money as it is.
I mean,
So
part of
one
the
of-
argument against the hyperscalers, right, and NVIDIA continuing to wanting alternatives is they're all developing their own chips for inference and other things, right? And so if you're NVIDIA, having these other clouds grow is actually in your interest, right? You want people that are dependent on your platform. And, at some point, people have even floated the idea that NVIDIA goes in and provides their own cloud, their own service. I think that would be tough today, but this is kind of like their backstop, right, against a lot of the hyperscalers. So,
I think Nvidia is going to partner and compete with like everybody. I mean, they're building their own clouds within the hyperscalers. They're partnering with other clouds. I think they've announced their own private cloud themselves. Like, I think this market is just like has such high velocity that you have to almost do everything, especially if you're them.
So I think we don't even have to. Do we even have to do the real opinions of you guys since you both own the stock? All right, you're both bulls, right? You have to be.
Yeah.
yeah,
You
I'm still a bull. I mean, obviously, I was buying in at a lower level, as Bruce talked about. But yeah, to the point of the growth, like if you think this thing can double, it looks a lot less expensive next year. And
I tend to
think AI slowing down at any point here in the near term. Like, there's no signs, right? Everybody's still continuing to up their capex budgets. Now that can always change, but like I'm willing to take that bet. I think they'll be a beneficiary.
Well, I'll give you my view, and I kind of give it already, which is I think that you're probably right. You're probably right that in the next 6 months, the next year, like this thing will probably just their access to NVIDIA and the fact that people don't really know this company. We're going to find out about it and look ways to play AI. They have kind of a differentiation being in Europe, and I still don't think their technology differentiation is anything at all. It's really just like they're another NVIDIA, the trough of NVIDIA, and NVIDIA does want to cultivate the competition. I just don't think there's anything sustainable here. So if I'm going to be wrong, I'll be wrong with you guys. So I'm going to put this for the purposes of our scoreboard next time. I'm going to put this long, but I do think this is toxic crap. This is you're going to get some Russian STD from this ultimately, but for now, let's party before you feel the burn. You're gonna feel the love. So that's where I'm at.
It's your motto in life, isn't it, El Gordo?
Yeah, that's right. You can always get amoxicillin later, right?
Or penicillin.
Yeah. Or take a prophylactic drug, as we discussed before we got on.
That's right.
All right. Just put in just the tip. Just put in the tip.
Just the tip. So three buys, Bruce. I assume no surprises from you here.
Yeah, buy for me for sure.
For you. All right. I think we have a pretty good track record when all three of us are buys. So it's happened a couple times, and all those stocks have gone up. I think Meta, maybe what else? Nutanix. I think that was another winner.
CrowdStrike.
No, you're just
You
trying
were
to
hating
rub
on
it in.
CrowdStrike.
Sorry.
Bitcoin. We all love Bitcoin. All bought houses with Bitcoin.
Anyways, I think we have a good track record. I'm going to stick with it for all three being buys.
Right.
With that, any parting thoughts?
Wear a condom.
Well, as we always say, bulls make money.
Bears make money.
Pigs.
Pigs gets louder.
Wink, wink.
Bye-bye,
Yo.
everybody.
Say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. I need that Skrilla on the Rilla. I need that Skrilla on the Rilla.